Stocks slumped Wednesday after the Trump administration released a list of $200 billion worth of Chinese goods that could be hit with tariffs. And China said it would retaliate. The Dow closed down 219 points. The Nasdaq was down 42, and the S&P fell nearly 20. Jill Schlesinger reports on what these tariffs could mean for the average American.
By imposing additional tariffs of 10% to $200 billion worth of Chinese goods, the next round of Trump tariffs could hurt consumers. The price of everything from seafood to shampoo and soap, cameras, refrigerators, and even baseball gloves could rise. Already, the current lumber tariffs have added about $9,000 to home prices. That's according to the National Association of Home Builders. And new tariffs on building supplies could increase them even further, sidelining many first-time homebuyers from the market. The North American food equipment manufacturers said tariffs could raise prices at Chick-fil-A simply by increasing the cost of a pressure cooker used by the restaurant. Tariffs could also impact American jobs. Both Harley-Davidson and BMW have said they would move some U.S. production overseas.
CBS News business analyst Jill Schlesinger joins me now. So, Jill, in your piece, you talk about the impact that these tariffs could have on larger companies. But what about small businesses?
It's tougher for them. You know, they can't just pick up and go to another location. And also think about this. Most small businesses don't have enough cash on hand just to absorb price increases. So I think we're going to have to watch and hear what's going on with that part of the economy, specifically those small business and maybe medium-sized ones as well.
Well, how destabilizing could an escalation be overall to the economy?
This year, the U.S. economy is expected to grow by over 3%. And, you know, that would be the strongest rate since 2005.
Wow.
Now, the tariffs that are already in place, the $50 billion with China and the U.S., the steel, the aluminum, the lumber, the European Union, Canada, Mexico, all of those things. Taking that together, we're talking about shaving off just maybe 1/10 or 0.2%. But if this were to go into $200 billion or some retaliation from China and then another $200 billion, then we're starting to eat into our growth. I'm not suggesting that we're going into a recession. That's not likely to happen this year. But this certainly is going to hurt U.S. growth if the full force of all these tariffs are implemented.
Well, so then for those at home who are watching this, who may have money in the markets, how should they be thinking about this? How should they be reacting? And what would your advice be to investors?
You know, I'm an old CFP, a certified financial planner, so I'm going to tell you that if you are a long-term investor, do nothing. Literally do nothing, because you're talking about 5, 10, probably 20, 30 years in the future. Don't do anything. And frankly, these trade hiccups, actions, potentially war, this could hurt the U.S. economy in the short run. In the long run, as an investor, you've got to stick to your game plan. I know it's tempting. You want to get ahead of the news cycle.
Sure.
You get nervous. But just look at the stock market action to date. All the major indexes are still up on the year despite this. So again, strong economy, companies are still growing their profits, and you don't need your money until decades into the future. So stay the course.
All right, Jill Schlesinger, thanks so much, Jill.
Great to be with you.